On a fairly quiet Monday, I thought we'd take a look at a health stock, Biome Australia. The company announced an increase in its full-year revenue guidance. FY24 revenue target has been revised $12.5 million. That's up from $11.5 million. The MD says that he expects to exceed FY24 target by $1 million or 8.7%. Now, I know this we tend to look at the top end of the healthcare sector. We have some great companies there, the Cochlears, the CSLs, the ResMeds, but some of the bottom end pharma stocks, Scott Phillips at the end of last year, really did start to take off as well. Is this a good sign for a microcap like this in that sector?
Mate, it certainly can't help, because if you look at their announcements, excuse me, they've got more than enough cash, and they say to deliver the FY24 plans. Now, if you think about FY24 now being only about 5.5 months left, they didn't say forever, they didn't say for 2025, they said for FY24. If you're going to have to raise capital, I don't know whether Biome will or not, but they are still bleeding cash. You're going to have to raise it. You really want a higher share price. So yeah, look, great news for these guys if and when they go to the market and say, we'd like some more cash, please. If you were to be a little bit skeptical, not cynical, but skeptical, you look at the sales upgrade and say, okay, again, if they were going to raise the money, this would be a perfect time to try and do it, because the market's excited. They've announced some good news. Again, I'm not saying they will. I'm just saying think about it if you're going to, because your share of the profits, or profits when they eventually come, will be diluted by whatever raising they make if they do it. Now, it's possible at some point they should tip into cash flow positivity. They're expecting their first monthly EBITDA positive month to come during the current financial year. But last quarter, they went through about $750,000 in cash. We've got about $2.1 million left at the end of that quarter. So what's that last quarter show? I should say the September quarter, which they reported on since. They haven't yet reported on the December quarter. So that's still to come. Again, no, I'm not necessarily negative about Biome, but it's worth just keeping in mind the situation that it's in. But you're absolutely right. A higher share price is great if they are going to raise capital, or frankly, even if they were considering it, they're looking at the share price saying, well, gee, we weren't sure, but now we've got a chance. Investors are excited about us. If we need to kind of fatten up the coffers, this is a great time to do it. It's a really interesting space to be in, Koshi. This is a probiotic business, basically, and with all the focus on gut health, the old microbiome, apparently linked to things like brain health and increasing amounts of scientific belief. I won't say evidence necessarily, but certainly more in the scientific field, saying, you know what, it kind of was all about the gut. The healthier our gut is, the healthier the rest of us tends to be. If you are in that space and you can either have some significant evidence or just a general acceptance or belief in this, then it's a good place to be. It's also great to be small. You know, it's on one hand really, really hard to get growth. When you're a tiny business, no one knows, really hard to get going. But at some point, a little bit of growth on a very small base adds up and adds up and adds up. Now, they're talking about having $12 million in sales over a year. For a small business, that's great. But of course, it pales into insignificance compared to almost any other meaningfully large company on the ASX. So getting an extra $1 million in sales shouldn't be that hard if you have a product, if you have a market fit, if you have a consumer base. So I kind of like the idea of Biome. I wouldn't necessarily invest in it. It's still losing money. We don't yet know where the ceiling is in terms of profitability and sales. Every company finds eventually a maturity phase. If they get that far, Biome not even making money, as I said. So still a while to go. But one to watch, and that sequential growth, all you can ask if you're a small growing business is, hey, are you doing what you said you were going to do? Are you growing? Are you getting traction? The answers all seem to be yes on this one. So again, not worth my money just yet, a little bit too early, but very hard to say the company itself isn't doing a really, really good job of growing, doing what it can to be more successful. They're certainly ticking those boxes.
Yeah. What do you reckon, Daniel? Because everyone thinks, oh, could this be sort of a micro Blackmores sometime into the future? But reading behind Scott's comments then, you know, the share price has doubled in the last 6 weeks. We've seen this happen before, just before a raise. Then everyone gets diluted and then the share price sort of drops back down again for an extended period of time. What's your view on it?
Yeah, so I think Scott's covered it off well. The one thing I'd point out is that, you know, like you've mentioned, it's probably a bit more of a consumerist company like a Blackmores rather than a biotech. It's more of a consumer product rather than something like a scientific base or something that needs to go through, you know, an approval system. So they're always interesting. It always comes back to brand value and how long it takes to build a brand that actually can generate, above market returns over the long term. We know it takes a lot of time and a lot of investment. So, interesting company. I've never really looked at it before, but just from that view alone, we know that there's going to be a lot of money required in product development, and they're hitting that inflection point at the moment. But I think they had about 3 million in cash at FY23 end, and a bit of debt on the balance sheet. So I think raises is to come very likely at the moment. So for that reason alone, I'd probably prefer to be out of it. Right. Perhaps once the raise and the presentations come out, see what the strategy is, and then there could be a consideration there. But if the data's correct, and the data providers, we know that they're not always correct, I think it might be a 65 million market cap odd company at the moment, which seems excessive given, it's 12 odd million in revenue. Yes, it's growing fast, but it is off a low base, and yet to hit that profitability yet. So valuation also looks a little bit rich there.
So it's doubled in the last 6 weeks. If you're in it, you'd be more inclined to take money off the table, sort of take advantage of this spike up, and maybe look to get back in sometime in the future if the numbers look more solid on a longer term basis.
Yeah, I think that's probably what I'd be doing, because we know that these companies, especially when they're in early stage, they can go through periods of high excitement. And there's one out there in the cannabis space called Vitura. And if you look at that share price relative to what the financials have done, you would have thought, geez, I thought this share price would be significantly higher. The financials look good, but you go through those phases of early stage hype, capital raise, then perhaps a little bit of a slowdown, etc. Yes. So you do need to be a bit more active in these types of companies.
Yep, absolutely.